welcome to Waterstone Mortgage Weekly Update. Jeff, we've been hearing a lot of what's going on over in Europe with their sovereign debt crisis, and we know it affects our interest rates, but could you break it down in layman's terms for us? I mean, economics major, psychology major, I need it in a little bit more kindergarten terms to really kind of understand, and I think the general public would probably appreciate that as well.
Sure. The short version is, over in Spain, they're basically having some public uprising against their austerity measures that they're putting into place. In France, political concerns, they're probably going to elect a new president. And in the Netherlands, they also have austerity measures being put into place. And what these austerity measures do is, if you're already in a recession and you're going to tighten up on what the government help is providing, the people don't like that, obviously. So what happens is they go into recession. There's a chance the whole world follows them into recession, is where the concerns are. Money flows out of Europe and into the U.S. mortgage bond security market as a safe haven. When that happens, it drives the price of that bond market up, and therefore the interest rates go down. And that's effectively what's keeping our interest rates over here, our mortgage rates, in a low capacity. So, or in a low rate environment.
So basically, because Europe is experiencing their own recession, and the government puts in these austerity measures. Now, an austerity measure is just where the government comes in and says we're going to pull back some of our aid to some of the federal programs. Is that what that is?
For example, over here, when we went into a recession, we cut back on the tax rate. All right, they're having problems paying for their bonds. All right, they have enough income coming in, so they have to actually increase their taxes at a point when people are already stressed.
Okay.
And we did the opposite over here to help get us out of recession, but they're having real challenges paying for, they're paying their bills when they come due on the bonds that they have to pay interest on.
Okay. So basically then the investors and people then look to putting their money into our mortgage bonds because they feel that's a safe haven, then our rates decrease, and that's what's keeping our rates low.
Exactly.
In a nutshell. Okay.
Yep.
Hey, and you also hosted a for sale by owner workshop this week. Can you tell us a little bit about that?
Sure. Dick Van Grinsven from Mayfair Title, Tamara Van Cray from Coldwell Bank of the Real Estate Group, Renee Reed from Remley Sensenbrenner Law Offices, and myself hosted for sale by owner workshop. So it was well attended. A lot of great information got dispersed. If you missed it, or if you have any questions, please give us a call. We'd be glad to give you an update and give you some more details. And that's a good segue into our tip of the week this week. For sale by owners, to have your people that come through your home pre-approved. If they're not pre-approved, have a lender in your back pocket to refer them to, so that you can make sure that they actually qualify to purchase your home before you take it off the market with an accepted offer.
Yeah, that would be a great tip for sale by owners. You don't ever want to pull your home off the market because you have an accepted offer without knowing, does that borrower really qualify to purchase your home? You could be limiting your chances of selling the home or miss potential buyers while your home is off the market thinking you have one, only to find out that that buyer is not credit worthy to purchase your home.
Yeah, especially in these times of tighter credit standards. I agree.
Definitely.
Great.
Thanks for tuning in. We'll see you next week.